It is a very interesting subject, purposes of valuation. What are the purposes of valuation for which the services of a valuer is required? We will learn about this.
So in purposes of valuation, we will study about the purposes of valuation, standards, and responsibilities of valuers. So with practical examples in your syllabus, you have to study in this various purposes of valuation in financial, legal, and taxation context. Then we will study about the regulatory framework under Companies Act, and you have to be conversant with some accounting standards. And then next is valuers as an expert witness, exploring the valuer's legal role in legal proceedings and the court testimony. And then you have to study about the professional responsibilities of the valuers, about their duties, what may be the potential errors in their valuation process and valuation report, and what is the professional negligence for the values. So, purpose of valuation, as you know, this is a very critical assessment tool across various domains in the Indian economic and landscape. So with the change in purpose of the valuation, your valuation or value of the property will change. Every purpose will determine the...
सर किसी का माइक में कुछ ऑन है तो बड़ा डिस्टर्बेंस आ रही है, काइंडली स्विच ऑफ म्यूट कर लीजिएगा प्लीज, किसी को बोलना सर जिसका भी है।
हाँ जी
सर किसी का कुछ माइक ऑन है और पीछे से आवाज आ रही है, कोई वो बंद कर लेगा प्लीज, हमें इसमें। कैरी ऑन सर।
Is it okay now? Hello.
Yes, sir. Yes, sir.
So it will your process of valuation, as you have already learned three methods of valuation. One was income approach method, second one was cost approach, and third one was market approach. And then many other things you have learned. So which method you have to apply, how the process of valuation would be, that all depends upon the purpose of valuation. So as a value, you first of all, whenever you have to do the valuation, first thing you have to ask the client is, what is the purpose of valuation? So many times as a valuer, you have to do the valuation for banking and finance valuation. So what you have to look for, why the valuation for banks are being done? You know, where the collateral security as the property, may it be land and building, may it be machinery. So banks, on the basis of collateral security, give the loans. So banks required an accurate valuation to determine the appropriate loan to valuation value ratio. So what is loan to value ratio? Anybody? What is loan to value ratio?
एलटीवी बोलते हैं इसको ना
सर। लोन की जो अमाउंट है, जिस जैसे प्रॉपर्टी की जो वैल्यू है लोन से ज्यादा होनी चाहिए, आई थिंक।
Yeah, correct. It might be 25%, it might be 40% more than the loan value.
So property's value, on the basis of value of the property, banks will give the loan. Okay, so what is the ratio of that? Maybe that if the property's value is 10 lakh, so if the loan to value ratio is 65%, it means bank will give a maximum loan amount of 6.5 lakh. So determining the accurate value, because on the basis of your valuation, bank will give the loan. So that is very important. So as a valuer, you have to give valuation on the basis of the property you have inspected. So if you are doing especially for the banking purposes, you have to be very careful while doing the valuation for banking purposes. So for example, a property values at 5 crore and loan to value ratio is 75%, then the maximum loan of 3.5 crore may be given by the bank. But as a bank has made the decision on the basis of your valuation, so it must be accurate as far as possible. Next, when you may have to do the valuation, especially in case of Companies Act, under Companies Act valuation, or if the valuation is done for auction purposes. So then what is the purpose of doing valuation for auction purpose? Here the purpose is to establish the minimum bid price for the properties being sold at the auction. So that is an important thing you must learn, that whenever you are doing valuation for auction, so what is the purpose here? Purpose here is to establish the maximum bid price for the properties which are to be auctioned. So for example, in a bank's distressed asset auction in Delhi, the valuer determined the reserved price of 2.8 crore for a commercial property based on its recent market transactions representing 80% of fair market value. So what is this 80%? Anybody who can tell what is this 80% of fair market value? What this market value? What this value is called?
तो डिस्ट्रेस वैल्यू बोलेंगे
Interest value.
Yes, value.
This test value or four-stage value. Okay, and then building insurance valuation. So whenever you are doing valuation for bank insurance, here your purpose is to determine the reinstatement cost or a replacement cost of the building. So for example, a heritage building in Kolkata with a market value of 8 crore received an insurance value of 12 crore due to specialized restoration requirement of materials needed for reconstruction. So it does not mean that if the value is of a property is 8 crore, its insurance value will be less than 8 crore. Its value may be higher than the fair market value. Insurance value may be higher or may be lower than the market value. Basically, your purpose is to reinstate the property, replace the property with the similar property having same utility. जी अभिषेक जी.
सर मार्केट वैल्यू कैलकुलेट करेंगे जो, उसमें लैंड वैल्यू भी कैलकुलेट होगा इसमें?
No, no,
Insurance
sir. What is here? What it here is written? It is only building value.
Okay.
So basically, in case of insurance, the things which may be destroyed due to fire, due to some natural hazard, etc., they are insured. So only superstructure, even in the building part, you will be taking superstructure part, not the part which is substructure, means foundation, etc. That cannot be affected by fire, etc. So only superstructure part is considered. So generally in 90% of the cases, it is lower than the fair market value of the building. But in some cases, as in the case of a heritage building, its insurance value may be higher because you have to find out the replacement or reinstatement value. So I think it is clear to you what is the building insurance value. Then as a valuer, you may have to do the valuation for helping the buyers and sellers to determine at what price they can sell their property, or at what price they can buy the property if you are doing the valuation for the buyer. So for sellers, it helps in set the realistic asking price. And for buyers, the aim is that you ensure that fair pricing and prevents overpayment. That is your duty, or that is your work to do valuation. So instead, including that, you have to provide to the sellers the documented justification for the price, highlights the property strength and unique features, and offers insight into the potential enhancements that could increase the value. Similarly, for the buyers, you have to tell him the potential issues that may affect the value. You may provide him the negotiation leverage, and your valuation will serve as a documentation for loan application also, maybe. So for example, a buyer in Pune commissioned an independent valuation that identified structural issues leading to a price reduction of 15 lakhs from the original asking price of 1.2 crore. So see here, what is your duty and how that valuer has helped the buyers to save 15 lakh by helping him to identify structural issues. Thereby, he was able to get the property which was being sold to him at 1.2 crore. He saved 15 lakh for the buyer. So this is the purpose when you do the valuation for the seller or for the buyer. Then you may have to do the valuation in legal context valuations. In court dispute, here your objective is to provide the evidence in property disputes involving ownership claims, damage assessment, or compensation determination, etc. And in case of probate valuation is establish the property's value at the time of owner's death for inheritance tax assessment and asset distribution among the heirs. And for determining the division and equitable division of jointly owned property among the multiple owners who are seeking separation, you may have to do the valuation, which will be called partition valuations, when the property is to be divided according to their shares among the different owners. So let us suppose, for example, in a high-profile inheritance dispute in Chennai, 3 independent valuers assessed a family's commercial property portfolio. The court-appointed valuer's assessment of rupees 25 crore was ultimately accepted, falling between competing valuations of 18 crore and 32 crore presented by the disputing parties. Then you may, as a valuer, you may have to act as a rent valuer to find out the rent, which may be called, which may be prevalent market rent, or in most of the cases it is the standard rent which you have to find out as a value. So standard rent is mostly find out on the basis of Rent Control Act of your state. There is certain procedure is given that how much percentage for land and how much percentage for building is to be assumed as expected return to the owner. And on the basis of that, we have calculated the standard rent. We have done a case studies on over this already. So here your purpose may be to find out the standard rent, or in case it is a leasehold property, if it is a new lease, then you may have to find out the rent at the beginning of the lease and how much rent is to be enhanced at different intervals that you may have to find out. So here that your purpose may be new lease agreements, a rent renewal negotiation, rent control compliance, that is standard rent calculation, then commercial lease standardization, and dispute resolution between landlord and the tenants. So you may have to do the valuation for rent fixation in following cases, and there are many others which may not be given here. And then most important, you may have to do the valuation for taxation purposes. So mostly in case of stamp duty valuation, you know stamp duty is levied on the basis of collectorate rate or guideline value as given by the collectorate of your city. But in case of any dispute, you may have to do the valuation to determine the amount of stamp duty payable during the property registration. So, for example, in Hyderabad, a property transaction recorded 85 lakh faced additional duty when the government value assessed its value 1.1 crore based upon its circle rates.
Friends, these are not only the purposes of valuation, these may serve as a additional avenues for you. You may consider it like that these purposes may be fruitful for getting avenues, new avenues and new reasons for generating avenues in your profession. Yes, sir. Please continue, sir. Sorry to interrupt.
Thank you, Sandeep ji, for your valuable input. Then, if you are registered with the CBDT as a valuer, you may have to calculate the value for capital gains tax valuation. So basically here your purpose is to calculate the appreciation in property value between acquisition and sale. So this is what the purpose is. You must know whenever you do the valuation, but you must know for what purpose you are doing valuation, then how to proceed for them. For example, in case of capital gain, what is your purpose? Here your purpose is to find the appreciation of the property value between acquisition and sale to determine the capital gain tax liability under Income Tax Act. For example, a Delhi property purchased in 2005 for 50 lakh and sold in 2023 for 2.5 crore required valuation to calculate indexation benefit and resulting liability. So we will be taking certain case studies over capital gain tax. Though it is not given in your syllabus, but many times you may get case studies on the basis of capital gain, and we will be taking a number of case studies on this capital gain tax that will make the things clear to you. And those who are already in this field, they know very well what is indexation and what is appreciation, etc. And then income tax rule 11 UE. So here the purpose is for determining fair value, market value in certain transactions, particularly under section 66(2) of the Income Tax Act. So this thing will be clear with you. A property gift in Mumbai required a Rule 11 UA valuation to determine if the recipient had a tax liability on the difference between actual consideration and fair market value. Ji, Jatin ji. Jatin ji, do you want to ask anything? And then lease and mortgage values. So in lease valuation, what is the purpose? Here your purpose is to find out the market rental for the similar properties, then on the basis of which you can give the decision or advise the lessor that how much should be the rent or lease rent. So here your aim is to determine the market rental rates for similar properties, then you may have to calculate the lease premium calculations. So you know what is premium? So premium is the lump sum amount which is paid at the start of the lease period, and its aim is to reduce some agreed rent. And then you may have to do the valuation at the time of renewal to determine the lease renewal terms, and maybe to find out the appropriate security deposit amounts. And in case of mortgage values, it is critical for the lenders to assess the property value when used as a security. So here your aim is not only to find the fair market value, you may have to find out the forced sale value, which is typically 10 to 15% below market value. Then you have to give property condition and its marketability, legal encumbrances which may be affecting the value, and future value stability projections you may have to give when you are doing valuation for the mortgage. So see here, when you do for valuation for the banking, it does not mean, or for when the bank is giving a loan on the basis of your property assessment. So you may have to give the fair market value. Then include that, you may have to include the forced sale value, and then you may have to give property conditions and marketability. And then effect of any legal encumbrances that may be affecting the value, and future value stability projections. That is important. So it does not mean that they were doing valuation and you will say that the valuation was for the date I have given the valuation. It is your duty to find the future value stability projections when you are doing valuation for the banking or for any financial institution. So a lease, for example of a lease is for a 99-year commercial lease in Ahmedabad's Gift City, values determine a one-time premium of 4.5 crore and an annual lease rent of 12 lakh based upon the projected future development potential. And for mortgage, Mumbai's Housing Society obtained a 8 crore development loan based on the mortgage valuation that assessed both current value and post-development projected value. So what is this post-redevelopment projected value? Anybody?
Valuation after the redevelopment of the project, which is higher than the current value.
You can see here, they are taken loan for the redevelopment. So many times that they have taken a loan for 8 lakh, 8 crore, sorry. So it does not mean that the value after redevelopment will increase by 8 crore. It may be more than 8 crore, it may be less than 8 crore. So you must be clear about this thing. Many times, let us suppose a person has added a swimming pool in his house by investing, let us pay an amount of 15 lakh. But it does not mean that the value of his house has increased by 15 lakh. It is your duty to find out what is the effect of that 15 lakh invested. It may be more than 15 lakh or it may be less than 15 lakh. That is where what you have to find out. Current value and post redevelopment value. Clear? Then other specialized valuations, you may have to do the valuation for when there is a merger and acquisition of the companies. When the companies are merging, they may require your services to find out the value of the company, individual companies, or one company is acquiring second company, then you may have to find out the value of the company. So for example, a hospitality chain in Goa's acquisition in Goa required detailed valuation of 5-bed beachfront property worth rupees 350 crore. Then for financial reporting, so for financial reporting, so many times regular asset valuation for corporate balance sheets and annual financial statements, your services are required as a filer. For example, a listed real estate company in India requires quarterly valuation of 2,800 crore property portfolio for investors reporting. Then you may have to do the valuation in case of government acquisition. So here the purpose is to find out the fair compensation and the right to fair compensation and transparency in the land acquisition, rehabilitation and resettlement act. So we will study in detail what is this land acquisition, rehabilitation and resettlement act, LARR. So here your duty, your purpose is to find out the fair compensation. For example, in Delhi Metro expansion, it requires valuation of 87 properties for compensation determination. So here, when you are doing valuation for specialized purposes, so they require additional expertise beyond your standard valuation method required. So here you may need deeper industry knowledge, understanding of specific regulations, and specialized valuation approaches. So only these three approaches, market approach, a cost approach, and income approach, they may not be enough. You have to go for additional expertise beyond your standard valuation method for such type of valuations. And then you must know valuation standards. What are the valuation standards? So first, though there are no valuation standard as of now established in India, but the valuations which are done under Companies Act 2013, for which you are preparing, these required certain conditions, certain procedures which are to be followed. First thing is you must know what is Section 247. We will learn it in detail in during our general laws portion. But here, this section says that the specific valuation under Companies Act, it must be conducted by the registered valuers who are registered with the Insolvency and Bankruptcy Board of India. So this establish a formal recognition of valuation profession within the corporate regulatory sector. So before the advent of this Companies Act, there was no government authority who was registering the values, and with the advent of Companies Act, these sections under Section 247, the valuers are being registered with the IBBI. So you know the procedure. You have to go through 50 hours MEP, then you have to clear a test, and then you will get registered with IBBI. So this is what Companies Act for Registered Valuers Rule 2017 stated. State provides detailed guidelines for values registration, qualification, and valuation methodologies. So these rules establish the organizational framework for valuation professionals and standardized approaches. So this act basically specifies a numerous situation requiring formal valuation, including issuance of shares for non-cash consideration, share swaps in mergers, acquisition, minority shareholders, buyouts, and corporate restructuring. In many cases, your valuations are required. So basically, you are required to be conversant with the Section 247 and Companies Registered Values and Valuation Rules 2017, which we study in general laws portion. But as of now, you must be conversant with these things. So Companies Act valuation, real world example, for example, a tech park acquisition. So a major IT company acquired a tech park in Bangalore's electronic city through a share swap arrangement with the property owner. So here, what was the challenge for the values? The valuation challenge was to determine the fair exchange ratio between the IT company's shares and the property owning company's share while complying with the Companies Act requirement. So IBBI registered valuers, they conducted comprehensive valuation using multiple methods that was discounted cash flow based upon rental projections, comparable transaction analysis, replacement cost analysis. So the valuation established a share swap ratio of 1:70 with a property valued at 420 crore. So this transparent, transparent valuation process satisfies the regulatory requirements and protected minority shareholders' interests. And then you have to be conversant with certain Indian accounting standards. So first we will have certain overview of the Indian accounting standards. So in 2015, Ministry of Corporate Affairs announced Indian accounting standard roadmap for the companies. In 2016, phase 1 was implemented for companies with net worth more than 500 crore. In 2018, phase 2 implementation of listed companies and others with net worth more than 250 crore. In 2018-19, banks, non-banking financial corporations and insurance companies began adoption. And at present, ongoing refinement and convergence with the global standard is continuing till today. So for key valuation standards, you may be conversant with Indian accounting standard AS 16, AS 36, AS 40, and AS 113. As for your syllabus, you have to learn these things. So what is Indian accounting standard AS 16? It is especially for property, plant, and equipment. Generally, it is called PPE. So we must know its key provisions. We need not to go in detail, but we must be conversant with the key provisions of this act, its standard. So it governs accounting for tangible fixed asset used in the business operations. It provides framework for initial recognition at cost. It allows choice between cost model and revaluation model for subsequent measurement. It requires component-based depreciation, and it maintains periodic review of residual value and useful life. That is the key provisions of this Indian accounting standard 16, with which you must be conversant with. So what are its valuation implications of this Indian accounting standard 16? Under the relevant model, regular professional valuations are required to ensure carrying amount do not differ materially from the fair value. So this creates ongoing demand for valuation services. See here. Your carrying amount do not differ materially from the fair value. So what is carrying amount? This is the amount which is in the banks of account, books of accounts of a company. So its main is to that there should not be much difference in the value of which is in the books of accounts of the company and the fair market value of the assets. This is what Indian accounting standard 16 says. Then next one is Indian accounting standard 36. It deals with the impairment of assets. This standard ensures that assets, including properties, are not carried in the financial statement at more than their recoverable amount. See here. It requires impairment testing. So regular assessment whether there are indications that an asset's value may have decreased due to market condition, technological changes, or physical damage. And then this is what you have to do. You have to, as a value, you have to find out that whether the asset's value has decreased due to market condition, due to technological changes, or due to physical damage. And then your final aim is to determine the higher of the asset's fair value, less cost of disposal, and its value use, present value or future cash flows. This is what you have to find out, recoverable amount. What amount can be recovered by selling or by disposing of this asset? And for the cash generating units, When the individual asset recovery values cannot be determined, then assets are grouped in cash generating units for impairment testing. For example, in a hotel in Agra showing declining occupancy required impairment testing. The value determined its carrying value as 45 crore, exceeded the recoverable amount of 38 crore, necessitating that the impairment loss recognition of 7 crore in the financial statements. So this is what the value have find out. They have find out that the value of the asset is 38 crore, whereas in the books of account it is 45 crore, which is it means there is an impairment loss of 7 crore in the financial statement. Then next is Indian Accounting Standard 40. It deals with the investment property. The definition and scope of this standard is it specifies the property held to earn rentals for capital appreciation rather than for use in production or supply of goods, services, administrative service purposes, or sales in ordinary course of the business. See here you have held the property, but for what purpose? For capital appreciation or for rentals. Instead of selling them or to use them in production or supply of goods or for administrative purposes or for sale in ordinary course of the business. So valuation requirements entities can choose between cost models, carry at cost less accumulated depreciation, or fair market value, carry at fair value with changes recognized in profit oblique loss. For example, a real estate investment company in Gurgaon with a portfolio of leased commercial properties, 850 crores, adopted the fair value model. Annual valuation by the registered value showed year 1 42 crore increase market growth, year 2 15 crore decrease market correction, and year 3 28 crore increase area development. So these changes directly affected the reported profit each year. So these are the things which you must be conversant with. And then fair value measurement according to Indian Accounting Standard 113. So this standard provides a unified definition of fair value and comprehensive framework for measuring it across all accounting standards. It significantly impacts how valuers approach and document their valuation process. Here, the process of valuation is that at level 1, you have to get inputs. Input means quoted prices in active markets for identical assets. So these are rarely applicable in real estate, and generally it may be in the plant and machinery or other things. Then level 2 inputs are those which are observable inputs other than level 1 codes. So such as comparable property, sales, market rents, etc. So there are 2 levels of inputs. Level 1, which are the quoted prices in the active markets for identical assets. These are rarely applicable for real estate asset, but in real estate asset, level 2 is more important. It means the observable inputs other than level 1 codes, that is comparable sale, property sales, market rent, etc. And level 3 inputs are those which are unobservable inputs developing using best information available, such as discounted cash flow projections, replacement cost with subjective adjustment, etc. So these things are unobservable. So you must be conversant with all 3 levels of input. For example, a specialized industrial property in Jamshedpur with a few comparable sales, the valuer primarily relied on level 3 input using discounted cash flow method with the detailed documentation of all assumptions regarding future rental growth, vacancy rate, and selected discount rate, which was 13%. So next is a valuer as an expert witness. So as a valuer, you may have to appear in a court as an expert witness. So what are the types of cases which requires valuer's testimony? In case of property dispute, when there are ownership conflicts, boundary disputes, easement rights, and fair family property divisions. In case of tax matters, when the owner has challenged the property tax assessment, capital gains calculation, or stamp duty determination. And for compensation claims, many times the government has given the compensation, but the client is not satisfied by the given compensation. He may approach you to find out the fair market value, and you may have to appear in the court to defend your valuation. So in case of that, land acquisition proceedings for compensation claims. And in case of mortgage dispute, in case of foreclosure proceedings and dispute over property's collateral valuation. So how the expert witness process for is done. So first, preparing for the court. So as a valuer, if you have done the valuation, you will receive a formal appointment as an expert witness. And then you will thoroughly inspect the property and go gather all the relevant data. Then you will apply appropriate valuation methodology. You will prepare comprehensive and objective expert report. And you will submit sworn statement and findings on an affidavit. And then you will anticipate that a cross-examination questions from the advocate of other party. So you may have been appointed by one of the party, may be the defendant or by the petitioner. The petitioner is one who has filed the case, and defendant is one against whom the case has been filed. So any one of you may, of them may approach you for expert witness. So how you have to prepare for the court, how the process is done. And then in the court testimony, what you have to do, you have to establish your qualification, your expertise, and then you may have to present the methodology and conclusions of your valuation. Then you may have to respond to the challenging questions from the opposing counsel, and then clarify any misunderstanding. And you may have to address the inquiries from the judge also. For example, in a high-profile case before Delhi High Court, a valuer faced intense cross-examination about different capitalization rates applied to two seemingly similar properties. The valuer successfully defended the differences by referring specific location factors, tenant quality, and lease terms that justified the variation. So all these things should be in your valuation report, especially when you are doing valuation for the court purposes. So remember that courts expect expert witness to remain impartial regardless of which party engages them. So your duty is to the court and not to the client. This is the important thing. Whenever you are doing valuation, so effective expert witness testimony, you must be having clear communication. You must explain the complex valuation concepts in simple understanding terms. You must provide thorough documentations of your valuation process and present the balanced views that acknowledges alternative approaches, recognize limitations in your analysis, and then ensures your oral testimony aligns with your written report. Contradiction between your report and testimony can severely damage your credibility and weight given to your evidence. For example, in a Maharashtra land acquisition case, the court specifically praised values testimony for clearly explaining how proximity to newly developed infrastructure justified a 30% premium over the standard circle rates, influencing final compensation award. So we will learn this legal framework, Indian Evidence Act provisions, but you must be conversant with. We will learn these in details during our general law study, Indian Evidence Act. But even then, you must be conversant with which sections are relevant for your expert testimony. Section 45, it establishes when expert opinions are admissible. Section 46, it addresses facts bearing opinion upon opinion of experts. Section 47 covers opinion as to handwriting, less relevant to the values. Section 48 specifies addresses opinion, the existence of right or custom. Section 49 covers opinion as to uses and tenant. Section 50 addresses opinion on relationship, and Section 51 it deals with the grounds of opinion. For example, Hari Singh versus State of Haryana 2010, it established that courts are not bound by the expert valuation but must consider it carefully. Another case, Municipal Corporation of Delhi versus Lalchand, it clarified that multiple valuation methods may be considered. And in another case, KP Chupanga versus CIT, it emphasized the importance of proper valuation methodology over just annual value. So we'll be taking a real world court case example, Bharat Petroleum Corporation Limited versus Great Eastern Shipping Limited. This landmark case before Supreme Court involved dispute over the valuation of leasehold land in Mumbai's prime area. Case background is that BPCL sought to renew a 99-year lease that was expiring. The parties disagreed on fair market value that would determine the new lease premium and annual rent. BPCL's value find out the value as 47 crore based upon the primarily on comparable transaction, and Great Eastern value, he gave the value as 86 crore based upon the development potential of the property. The court appointed an independent valuer who determined the value of 72 crore using multiple methods, including comparable sale transactions, income capitalization, residual value based upon development potentials. So the Supreme Court accepted the court appointed values assessment, noting that importance of considering multiple valuation approaches and specific legal constraints of the property. So the case established important precedent for how a court evaluates competing expert testimony. So this is all about purpose, standard, and other things related with the purpose of valuation and Indian standard accounting standard with which you as a valuer must be conversant. Okay, if you have any doubt, you may ask.
सर इसका
सर वन
वैल्यूएशन
डाउट
कितना है?
जी सर,
कितने
जी
मार्क
सर,
के लिए है?
हाँ जी,
इसका वैल्यूएशन कितना है एग्जाम में?
इसका वैल्यू मार्क पर्पस ऑफ वैल्यूएशन जो है आई थिंक इट इज ऑफ 3 मार्क्स, 3
ओके
or 4 marks.
Sir, all the sections and all will be there for the exam. Like, do we get questions from all those things? Indian account sec.
You may get questions. This presentation, this PPT will be given to you, and you may go through all these things. You must have to remember. There are certain things. So whatever we have studied so far, that was totally devoted to our profession. But from now onwards, what we are doing, many things are there. They want to make us accountant. They want to make us lawyer. And why, you have seen the case studies. That is how here you can learn that whenever you are doing evaluation, you must apply multiple approaches, not only one approach. From the multiple approaches, then you must decide what is the final value. Only then you can defend your value. If you have used only one method, say comparable sales method, it may not be enough. As I have explained in a case, the Supreme Court has clearly told. So this is what. So not only you must be conversant with the purpose of valuation, your process of valuation must be known to you. So this is where your expertise, your experience will come into play. And of course, you have to learn these things. You have to learn these things by going through many times. You cannot remember the section 45, section 46, because lawyers are always conversant with them, but we are not conversant with them, but we should be.
Sir, for solving this type of disputes is only 34 AB or IBBI is necessary, or should we have any other qualification?
Sir, it is up to the court or the client. If you have an experience as an engineer, you may work as an expert in the court, as an engineer, as an architect. And especially if you are doing valuation for the court, in certain states, you have to get registered with the high court of your state as a value. They also impanel for their cases. Impanelment is done by the high court. Otherwise, in small cases at local levels, as an engineer or as an architect, of course, if you are registered with CBDT and IBBI, it will be an added advantage to you. You may add this because you have you have to give your qualification, your experience, and how many cases you have appeared as an expert witness. You have to give all the details.
Engineers and architects are being appointed as local commissioner by the courts for any type of property disputes, Rent Control Act, or any building safety certificate, or any other clarification. They are being appointed as a local commissioner by the court. And they will work on behalf of court, and each and everything will be done in legal parameters.
But remember, when the court has, whether the court has appointed you or petitioner or a defendant, it is your duty to do the work for the court, not for the petitioner, not for the defendant, because it is you who have to defend. And one thing more, if you are able to appear in the court as an expert witness, if you think you are confident, only then you do this work. Because many times when you go to the court, the other party counsel will ask you the questions which are neither related with your experience nor related with the work you have done. He will ask you unnecessary questions. There his aim his or her aim is to investigate you. That in doing so, you may give some wrong answers, and that may land you in trouble. Okay, then this is all about purposes of valuation. Sir, how many marks is purpose of
3 marks, sir. 3 marks.
3 marks? It is 3 marks.
You will get
So one-
3 questions certainly out of this subject in your examination.
So you must go through this purpose of valuation, Indian accounting standards, and expert witness details. And regarding this Indian Evidence Act, we will be dealing in detail with when we will be doing general laws.
Sir, may I share one point?
Yes.
Recently, I attended US court through Zoom meeting as a expert witness. It lasted 6 hours. I successfully completed that assignment. My client's attorney appreciated my performance.
That's good. So it will be better if you share your report in the group by deleting the names, etc., details, etc., so that it is fruitful for others also.
Please remove the confidential
Sure, sir.
information mentioned in your report before sharing anywhere.
Sure, sir.
Yeah. Me and Rajvinder sir are already doing this type of work since last 10 years for all the courts and high courts also. And we have also completed our LLB during last few years. And it is a very revenue generating profession as well as respect generating work also. You will get a lot of respect. And you will also learn the laws and ethics and various other things related to legal profession.
Yes.
Sir, I have one query.
Yes.
When we get the offer for doing the valuation for the purpose of accounting from the private parties, not from any government agencies, from the private parties, is it a problem if we give the report in our letterhead and with our sign and seal?
It does not matter if some private party has asked you for the valuation, you should give it on your letterhead. If you have done the work correctly.
Yeah, that is for accounting, for their internal assessment and accounting purpose, maybe for the ITR also.
But if you are conversant with the procedure,
okay,
then give it on your letterhead. If you are confident, if you are conversant with the procedure, so you must write down that this valuation, the purpose of valuation is this. It cannot be used for some other purpose.
Yes. Yeah, I have given like that only, but still had a doubt.
But it should be related to your asset class only.
Yes.
You are qualified.
Yes.
And you must write either on footer or of every page or on header that this report is not made for any banking, accounting, legal, or any court purposes.
Yes. I wrote the same, sir. Fine.
Banking, taxation, legal, or accounting purposes.
Seriously, we will be starting with our next topic, that is statistics.
Yes, sir.